Yo, what's up, everybody? It is Monday, May 5th, Cinco de Mayo. You out there having your margaritas, your shots of tequila, whatever. I'm not. So the market was down today. Not as bad as it was in the early morning or overnight session, I didn't see anything particular today to do. I think you got to sell this bounce in gold at 33.50. If we get up there, we're very close now. We're it's basically almost there. Because I'm kind of stunned by the amount of liquidation that I've seen in futures markets on this gold rally. So that may not mean anything. It may be just some kind of technical thing. But that's financing coming out of the market. That's money coming out of the market. And I understand that futures don't move the cash market, the actual physical gold price. I mean, they could have a short-term impact, but over time, gold is going to do what it's going to do based on the fundamentals of supply and demand. But I'd be selling this bounce. Here's the thing that I've been noticing. And I don't know if you guys have been seeing the same thing. I'm sure you probably have. But, now the consensus is kind of like there's not going to be any recession anymore. We went from sheer panic in late March and early April about the tariffs. It was, if you think back, everything was catastrophic. This is going to be it. This is the Great Depression 2.0. This is 1929. This is Smoot-Hawley. Then you had Atlanta Fed at one point coming out with a negative 3.5% GDP forecast, and it was just everything was terrible. And I kept saying a lot of that. At least a lot of the market action was due to, again, the bilge pump, the massive amounts of reserves that happened from the end of January into that tax drain in April. All right, I was on that like every day, every video I made. I said, the boat's gonna sink because the bilge pump is not operating effectively, and of course the bilge pump was. Treasury was operating under the debt ceiling. So the sale of securities, it was a little not normal. And then came the tax drain, and we had, last week, where they're saying was like the best market performance in 20 years or something like that on that tax drain. Now that's it for the tax drain, folks. I mean, we're back to normal spending now, and on May 15th, we're going to have a quarterly interest payment. Last year it was like 63 billion. It was an 80 billion net. It was an 80 billion leading flow day. So we got that coming. Now here's the thing I was going to say, everybody was doom and gloom. It was the end of the world. Back in, late March, early April, we had, what did Trump call it? Independence Day or something like that. He had a name for it where, we broke free from the globalists and the global system and blah, blah, blah with the tariffs. And now everything's been recovered, and these economists and the forecasts are like everything is rosy and we're going to have booming growth. In fact, Goldman came out saying second quarter 2.4% growth. And you had other economists now saying, no recession, there's no chance. Now, I admit that fiscal flows are still very strong. Don't get me wrong. I mean, we're still leading flows are still up 420 billion over last year. I mean, that's enormous, okay? And even net government transfers, even though the differential narrowed a little bit, it's still up 290 billion over last year. I mean, you can't, I talked about this, that's like tsunami kind of numbers. You can't really bet against that. That's just a massive amount of fiscal. But every time, whenever I hear like everybody, you know, kind of coming together with the same perspective, where, you know, a few months ago it was all terrible and doom and gloom, and now, and also, you know, I look back at the headlines from late last year. I keep a record of those headlines, and you know, everybody was like, 2025 is going to be awesome, and the market's going to go through the roof, and everything's going to, and I was saying back then, just be cautious. There's things ahead that could create some problems. And I wasn't only talking about the tariffs. I was talking about fiscal drag. I was talking about, you know, all that stuff. So here's the thing. Everybody now is like, yeah, you know, no recession anymore. We went through the dip. Everything's great. As soon as I start hearing stuff like that, like my contrarian instincts just pop up on the radar screen. I mean, I just automatically get contrarian. It's not that I intentionally want to go against that. I mean, that could be right. Like I said, the fiscal flows are still very strong. So that could end up being true and correct. Like we could have a very strong economy and the stock market could. But I see some things. For example, I see, some rising fiscal drag in the form of tax deposits. Not that taxes were increased, but you know, we had some extensions and things like that, which have fallen off. And now, you know, those extensions, I said over that 6 or 8 month period, however long it was, I said, consider those extensions to be short-term tax cuts, and the economy and the market will react as if that's the case. Now they're being taken away. All right, you got that. You got the stall now in interest income transfers that's being dragged down by T-bill interest income. Is keeping overall interest income transfers kind of flat year over year. You don't have that increase again, you know, more transfers. It's flat. You still have Congress that has to pass a budget. Now, that might be nothing. It might end up being more spending than spending cuts. Okay, and when I say spending, I would include tax cuts because that's the fiscal equivalent of more spending. I remember one time I said that when I was on Fox News to some economist who was like, we were having, I guess it's kind of not a debate, but just it was a segment when I said that tax cuts are the fiscal equivalent of spending increases. He went crazy. Like, what are you talking about? You don't know what you're talking about. It is. If it puts money in your pocket or keeps money in your pocket, it's the fiscal equivalent of spending increases. Very simple. And just like spending cuts are the fiscal equivalent of tax increases, they do the same thing. They might be called different things and they might affect a different income strata, but that's what they are in terms of fiscal operations. So we don't know. What I'm trying to say is that there's still stuff out there. Like to make a determination right now and say there's going to be no recession. Like, how do you know when there's still some things that have to be finished? You know, we still got to finish the budget. We have to see how that plays out. And how do you know when we're seeing, I told you guys that back in December, individual income tax deposits to the Treasury were 45 billion less than last year. So, you know, if they're less, that's the fiscal equivalent of a spending increase. Now they're 55 billion more than last year. That's the fiscal equivalent of a tax increase. So like, I'm seeing fiscal drag. It's not huge, but it's happening. And like I said, we still have to see what happens with the budget. Now, again, it could be that everything is fine and we're still going to have these enormous leading spending flows and we're still going to have these very, very strong net government transfers. And then, great. If that's the case, new all-time highs in the market. But all I'm saying is like, be careful here. Suddenly all these guys who were wrong, they're switching to the other side saying no recession. I don't hear any one of them talking about this fiscal drag that I'm talking about. I don't hear any one of them talking about the budget and what may come out of that. None of that stuff. All they're saying is like, oh, the job report last week was good, so no recession. And by the way, I'm watching employment tax deposits, which to me, and if you get my report, you know what I'm talking about. Graphically, if I look at employment tax deposits, that looks like that uptrend is right about ready to start breaking down. I don't know. And if that's the case, that would be another sign that whatever's going on here fiscally is in, and you know, when I say fiscally, by the way, I didn't even mention that the tariffs, that's fiscal drag too. Okay? That's up 17 billion over last year as of last Thursday. It's more now, most likely. They're not mentioning this. None of these other economists are mentioning this. So as usual, I bring this to your attention. But like I'm saying, like right now, I think we're going to get more back and forth action in the market until these things are finalized, until we know. And by the way, we're not going to finalize. If we finalize tariffs, they'll be finalized at some number. I mean, it's still going to be fiscal drag, okay? And we don't know. We got to see what the budget brings. Anyway, that's it for today, folks. I'm heading out to Colorado tomorrow. I'm going to try to hike or climb a 14er. That's a 14,000-foot mountain. That is, I'm going for Quandary Peak. You could look it up. Quandary. It's near Breckenridge. It's like 14,250 feet. I've done one 14,000-foot mountain before in Colorado. This is going to be my second one attempt anyway. There's a lot of snow still up there. I don't have all the best equipment, so we'll see. But I'll try to summit that thing on Thursday. But I'll be making videos, and I'll be sending out my emails and my reports and everything else. So please like and subscribe, and notice that that's slowed down quite a bit. I'm trying to get to 10,000 subscribers. Thank you if you've already done that. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. Thank you. Bye.